Hong Kong Stock Exchange posted a second consecutive year of record profits in 2025. The city ranked as the second most active IPO destination in the world. More capital was raised from Hong Kong listings in the first 2 weeks of 2026 than in London across the entire previous year. This is not a recovery story. It is a repositioning story. Institutional capital is returning to Hong Kong with conviction. The government is preparing tax reforms that would allow private credit and alternative investment managers to operate here on terms competitive with Dubai and Singapore. The city's most sophisticated investors are not sitting still. Globally, private credit is going through a period of stress. Redemption requests are rising. Some funds have limited withdrawals. Questions are being asked about valuation standards and lending quality, but the problems are specific. They are concentrated in broad, open-ended retail vehicles, funds that took in capital from investors who did not fully understand what they were buying. Well-structured private credit with defined terms, asset security, and fixed investment periods is a different proposition entirely. For high net worth investors based in Hong Kong, managing capital across multiple jurisdictions without the tax wrappers available to domestic investors, the current environment raises a specific set of questions. Public equity exposure is tied to markets that are moving on geopolitical factors outside your control. Fixed income yields remain uncertain, and the mainstream private credit products now being marketed widely carry risks that are not always disclosed clearly. Private credit and litigation funding, accessed on clearly defined terms, offer something different. Returns that are not driven by market sentiment, income that is contractual rather than discretionary, and a structure you understand before you commit. Litigation funding generates returns through legal settlements, not market movements. Private credit generates income through loan repayments secured against assets, not through share price performance. Neither strategy is correlated with the Hang Seng, regional currencies, or the price of oil moving through the Strait of Hormuz. For a portfolio that is already exposed to the full range of regional risks, that structural independence matters. Kerry Suen works directly with high net worth expat investors in Hong Kong. No intermediary layers, no generic solutions built for a different market. And the starting point is understanding your position, your markets, your jurisdictions, your timeline. The program recommendation follows from that. If you want to understand how private credit fits your Hong Kong portfolio, the details are at carrysuen.com.